Welcome to my class today. My name is Mr. Cleophas, and allow me, today I want to discuss about subsequent events because these are concepts which is commonly examined, and it's important to know what we mean by subsequent events. So many people, they just want to know what are these subsequent events. And I will explain in simple terms and say this. Anything subsequent, or for any event to be called a subsequent event, the term subsequent means coming after. And that is why when we define subsequent events in auditing and assurance, we mean those events after the company has closed its books. The events after the statement of financial position dates, the events after the balance sheet dates, these are events after the company's accounting period. So, when we talk of subsequent events, they are those events after the balance sheet date or the statement of financial position dates, and they can be favorable to the company or they can be unfavorable to the company. So I'm saying this in short. If you're told to explain what's a subsequent event, you just need to say these are those events, whether favorable or unfavorable, that occur after the statement of financial position date and before financial statements are issued to the public or they are authorized for issuing. Then you need to know the types of subsequent events. Types of subsequent events. We have two types of subsequent events. We have number one, adjusting events. Number two, non-adjusting events. So I'm saying we have adjusting and non-adjusting events. What are these adjusting events? Adjusting events are those events, whether favorable or unfavorable, that occur after the statement of financial position dates and before financial statements are authorized for issuing, and they provide additional evidence. I've said they provide additional evidence of a condition that existed. This condition must have been in existence as at the balance sheet date or as at the statement of financial position dates. So I'm saying these are those events, whether favorable or unfavorable to the company, that occur after the company's accounting period or the statement of financial position period, and they provide additional evidence of a condition that existed as at the balance sheet date or the statement of financial position date. These events, they require drafted accounts to be altered to accommodate them. Said, adjusting events requires drafted accounts to be altered to accommodate them. And failure to adjust financial statements for adjusting events renders the financial statements to be materially misstated. So that was briefly I just wanted to explain. So you can be asked to give examples of these events. So for example, you may have, when the company is closing the books, you have maybe debtors value, And before or during the period the auditor is doing the audit and before the AGM, that is when the financial statements are authorized for issuing. So before that time and after the company has closed the books, that is the time the auditor is now doing the audit. If now we have bad debts which has been written off during the period, then we need to adjust our debtors value for such bad debt written off. So that's an adjusting event, because if we leave our financial statements without adjusting them with respect to these bad debts which have been written off during the period, then the financial statements will not be accurate, giving a true and fair view. The financial statements will be misstated. So we need to adjust financial statements for the bad debts written off. So allow me to give some examples of these. None are the adjusting events. We have the bad debts, examples of adjusting. Examples of adjusting events. Number one, we have bad debts. They are written off or recovered. We also have bankruptcy. Bankruptcy of a major debtor. A debtor was been in existence, but now he has been declared bankrupt. We had sold some commodities and then they have been returned. Now they are returns inwards, so returns of goods sold. You also have sale of inventory. All those, or discovery of material frauds. So these are examples of adjusting events. If there are some bad debts which have been written off this period, or they have been recovered, meaning previously they were written off, if they have been recovered, we need to adjust our bad debts and our debtors value. Bankruptcy of a major debtor. This debtor has been declared bankrupt. In our debtors value, the value of the debt is there. We need to adjust financial statements with respect to that debtor who has been declared bankrupt, because the truth is, if you are declared bankrupt, he can never pay us the amount owing. Returns of goods sold. So in our financial statement, when we're closing the books, they were sales. They have now been returned. They should be now returns inwards, reducing the value of the sales. We have sold inventory, so it is no longer in our stock. That's a sale. Discovery of material fraud during the period. We need to adjust financial statements for this, or material frauds and errors. Can be material frauds and errors, etc. So those are adjusting events. Allow me to just explain the non-adjusting events. So those were adjusting. So let me talk about the adjusting, the non-adjusting events. So for any event to be non-adjusting, it is not giving additional evidence of a condition that existed. So non-adjusting events, when you're explaining, you say these are those events, whether favorable or unfavorable to the company, that occur after the balance sheet date or after the statement of financial position period, and before financial statements are authorized for issuing, and they do not, underline that, and they do not provide additional evidence of a condition that existed as at the balance sheet date or as at the statement of financial position dates. Said, they do not provide additional evidence of a condition that existed as at the company's reporting date. So drafted accounts do not require to be altered to accommodate for the non-adjusting events. So the drafted accounts should not be altered to accommodate for non-adjusting events. So they just need to be disclosed. And that's why we normally say a disclosure is therefore required for the non-adjusting events. If you adjust financial statements for non-adjusting events, then financial statements will be materially misstated. It is important to have some examples of these non-adjusting events. So let's have examples. 1. Issue of new shares. So these are shares which are new. They are not touching on events as we were closing the books. Issue of new shares is 1. When the inventory is destroyed, I can talk of before that, mergers and acquisition. Loss of inventory or either non-current assets. So loss of the company's assets due to fire or flood. It's also a non-adjusting events. Dividends declared, meaning it is declared after the balance sheet date or after the date of the company's financial statements. Changes in the foreign exchange rates. Changes in foreign exchange rate. So that's about these events. And it's important to know which are the procedures the auditor should perform with respect to these events. And that is audit procedures for subsequent events. And I will just discuss these ones. The procedures for the auditor with respect to subsequent events. So as the auditor of the company, one thing I will do when it comes to subsequent events is to just make inquiries or to review the company's procedure. So the first thing I will review, so that's a procedure. So procedures is what auditor should do. So I will review those procedures put in place by the management of the company to identify subsequent events. So that's one thing I do. How do management of this company determine these subsequent events? So that is one thing I will have to check on. So I will review those procedures which have been established by the company to identify the subsequent events. Again, if I review some of the reports of the company, I'm going to know or to just identify some of them. So I will review the company's reports and financial statements for reference of any subsequent event. Another procedure I will perform is I will inquire from the company lawyers of pending legal cases against the company and their possibility of becoming actual liabilities to the company or their possibility of crystallizing. So let me inquire from the lawyers of any pending legal case or claims against the company and the possibility of such claims becoming actual liability to the company during the period. That's another thing I will do. I will also ascertain the effects. And please don't say ensure. I've said I will ascertain, not ensuring. I will ascertain the effects of subsequent events on the truth and fairness of the financial statements. Another procedure as the auditor, I will determine or ascertain the effects of subsequent events on the audit report. Another procedure I need to perform is I will ascertain or check or determine whether financial statements they have been adjusted for adjusting events and whether adequate disclosures have been made in the financial statements with respect to non-adjusting events. So I've said I will ascertain whether adequate disclosures have been made with respect to non-adjusting events, and whether the financial statements, they have been adjusted for the adjusting events. So those are some of the procedures in the auditor I will have to just perform. Again, I will also determine or ascertain the effect of subsequent events on the going concern of the company. Are these events going to affect the going concern of the company or not? So we must ascertain the effect of subsequent events on the company's going concern. On the company's going concern. And another thing I can do is to obtain what? Management representations. As the auditor, I will obtain management representations from management on whether they have considered all subsequent events known to them. Then you can again be asked about the auditor's responsibilities for subsequent events. Auditor's responsibilities for subsequent events. Auditor's responsibility for subsequent events. Alright, we have responsibilities of the auditor for subsequent events, and they are categorized into three, and the last one is, we have four, but the main ones are three. We have responsibility up to the date of the auditor's report. It's important to know at what time do the auditor report, or date is the report. The report of the auditor is dated as at the time he completes the audit work. So auditor's reporting date is the time he completes the audit work. And if there is any subsequent events occurring after the reporting date, so this is the company's balance sheet date. I can put it balance sheet dates or the statement of financial position period. Auditor's reporting date. Auditor's reporting date. Then this is when the company holds the AGM and the financial statements are issued or authorized for issuing, and then after the AGM is issuing of financial statements to the public. Now, during this period, when the company has closed the books, up to the time of the auditor's reporting date, this is the time auditor is doing the audit. This is the time auditor is seriously doing the audits. And I want to explain the responsibility of the auditor during this period. So, during this period, auditor has a responsibility to make inquiries. So, he should make inquiries. For subsequent events. So, responsibility up to the date of the auditor's report is that auditor should make inquiries during this period for subsequent events. He should perform procedures to enable him identify any subsequent event. Auditor during the period should ascertain whether financial statements have been adjusted for adjusting events and whether adequate disclosures have been made with respect to non-adjusting events. Again, during the period, auditor should obtain management representations from management regarding the subsequent events. So I've said during this period, and that is up to the date of the auditor's reporting dates, auditor has a responsibility to make inquiries for subsequent events. He should perform procedures to ensure or to enable him identify subsequent events. Auditors should also ascertain whether financial statements they have been adjusted for adjusting events, and whether adequate disclosures they have been made in the financial statements for non-adjusting events. Again, we have responsibility after. Number 2 is responsibility after the date of the auditor's report. The date of auditor's report. But before financial statements are authorized for issuing. So I want you to know it's which period? This is the period. So after the auditor's reporting dates, but before issuing. So during this period here, we want to know what should the auditor do. Already auditor has concluded during the audit, that's why he has dated the report. And thus the general rule is that he should not make inquiries. After auditor has finished his work and dated the report, he cannot make inquiries for subsequent events. So when you asked about the responsibility of the auditor during the period, you say the general rule is that auditor does not have responsibility to make what? Inquiries for subsequent events during that period. The responsibility of informing auditor of any subsequent event during the period rests with management. So we are saying if management becomes aware of any material subsequent event during the period, let them inform the auditor that this is what you have become aware of. And the truth is, again, if auditor also comes across any subsequent event during that period, he should inform the management. They should discuss the matter, consider the effect of such matter on the financial statements, and take the appropriate measures. Like auditor can decide to change the opinion, maybe if the matter is affecting the truth and fairness of the financial statements and also the auditor's report. So I'm saying is that auditor has no responsibility to make inquiries during the period. The primary responsibility of informing auditor of any subsequent event during the period rests with management of the company. But if also auditor becomes aware of any matter which is subsequent in nature during the period, he should discuss the matter with management, consider the effect of such matter on the financial statements, and take the appropriate measures in the circumstances. So that is what is the auditor's responsibility up to that period. We have also auditor's responsibility after financial statements they have been authorized. This is the period now. After they have been authorized, auditor has no responsibility the same way to inquire for subsequent events. So if there's anything auditor can do here, not to do inquiries for subsequent events. And then the general rule holds and say you just need to mention, say the general rule is that auditor does not have responsibility to make inquiries for subsequent events during the period. However, if auditor becomes aware of any material subsequent event, I've said, however, if auditor becomes aware of any material subsequent event, which if known to him as at the reporting date or as the time he was dating his report or the time he concluded his work, if known to him as at that time, if it could have caused him to modify the report, then auditor should inform the management of such event, discuss the matter, consider the effect of such subsequent event, and take the appropriate measures in the circumstances. Like they can issue a warning, because already financial statement they are with the public. What can happen is to request the management to issue a disclaimer to the public to stop reliance maybe on such a report which auditor gave, in order to minimize the liability of the auditor. So what I'm saying is this: if auditor becomes aware of any subsequent event during this period or of any matter which is material, and which if he could have known the matter as at the time he was dating his report or finishing the audit. That matter, if he could have known it, if that matter could have caused him to modify or change the opinion, then auditor must discuss the matter with management or must inform management, discuss the matter and consider the effects of such matter on the truth and fairness of the financial statements, and then take the appropriate measures like issuing a disclaimer or a warning and requesting the company to issue a disclaimer to the public to stop reliance on his report in making decisions and thus minimizing or reducing the auditor's liability. So that is the responsibility of the auditor when it comes to subsequent events. You can have the general responsibility, which is not a must, it's not very important, but let me have the general responsibility of the auditor for subsequent events. And basically, the general responsibility is that auditor has a general responsibility of ensuring that or of identifying subsequent events and ascertaining whether they have been properly identified and also properly accounted for and adequately disclosed in the financial statements. So what I'm saying is auditors have general responsibility to ensure that subsequent events are identified, properly accounted for and adequately disclosed in the financial statements. Auditors should consider or he should ascertain whether the effects, so he should ascertain the effects of the subsequent events on the truth and fairness of the financial statements and on the audit reports. So that is the general responsibility of the auditor. You can be asked to talk about the accounting for subsequent events. As I wind up on this, accounting for subsequent events, you'll need to say, number one, that the standard requires that number one, adjust financial statements for adjusting events. So I've said that this is the part of accounting for subsequent events. Number one, adjust financial statements for adjusting events. Number two, do not adjust financial statements for non-adjusting events. Number three, if the entity declares dividends, after the balance sheet date or after the statement of financial position dates, then this entity should not recognize this as a subsequent event, or should not recognize this as a liabilities. So I'm saying if the entity declares dividends after the balance sheet date or the statement of financial position period, then the company should not recognize this as a liability as at the date of the balance sheet or the company's reporting dates. And thus, it is a non-adjusting event. So, dividends which have been declared, that is a non-adjusting event. So, please ensure you know the types, or you know how to define subsequent events. Know the two types of subsequent events, the adjusting and the non-adjusting events, and know some examples of the non-adjusting events and the adjusting events. From there, know the auditor's responsibilities or procedures, not responsibility, but auditor's procedures or the audit procedures for subsequent events. Know the auditor's responsibilities for subsequent events, and know the accounting for subsequent events. That is what you need to do to answer any question in exam, either in section 4 or in intermediate level auditing and assurance, or in advanced level, that's advanced auditing and assurance. The paper specialization paper advanced auditing and assurance is S2, specialization paper number 2. So thank you for watching, and ensure you subscribe to this channel. My name, I said earlier, is Mr. Cleophas. My number is there. You can just WhatsApp me in case of any question which is giving you some problems, and we are going to just agree, and then I'm going to help you out. Thank you so much. Let's meet on next class. Bye-bye.